Hi. Let's learn about leasehold assets. A leasehold is an accounting term for an asset being leased, such as a building or space in a building. The lessee contracts with the lessor for the right to use the property in exchange for a series of scheduled payments over the term of the lease. For example, renting space in an office building for a company's use or renting a building to be used for a retail store are two examples of a commercial leasehold arrangement. A leasehold contract will stipulate the terms of the agreement between the lessee and the lessor, property owner or landlord. The contracts for commercial properties are generally complex agreements that stipulate landlord responsibilities, tenant responsibilities, security deposits, breach of contract clauses, and leasehold improvement clauses. Leases for commercial properties typically run from 1 to 10 years. There are different types of leaseholds, including tenancy for years, periodic tenancy, tenancy at sufferance, and tenancy at will. After a lease agreement has been finalized, the lessee, or tenant, begins to build out the space for its purposes to the extent allowed by the contract. Work on walls, ceilings, floor space, lighting fixtures, additional plumbing fixtures, shelving, and cabinets represent leasehold improvements that are recorded as fixed assets on a company's balance sheet. Depending on the contract, leasehold improvements might be paid for by the tenant, the landlord, or a combination of both. Leaseholds are most common for brick-and-mortar retailers such as Best Buy Company, Incorporated. The company leases a majority of its buildings and makes leasehold improvements that suit its standardized interior functional and aesthetic design. Rent expense is recognized on a straight-line basis to the end of the initial lease term, and any difference between straight-line expense amounts and rent payable is booked as deferred rent. For some retailers, leasehold improvements are a significant portion of gross property and equipment expenses. A leasehold interest is a contract in which an individual or entity, or in real estate terms, a lessee, leases a parcel of land from an owner or lessor for a set period of time. Leasehold interest most often refers to a ground lease and tends to therefore last for multiple years. A leasehold estate is an agreement that a tenant can use an owner's property for a set period of time. The estates are often backed up by contracts or lease agreements that lay out the duration of the rental, the terms and conditions of use, the payment required, and the landlord's obligations to the tenant. The IRS does not allow leasehold improvements to be deducted. However, since improvements are part of the building, they are subject to depreciation. Leasehold improvement depreciation should follow a 15-year schedule that has to be re-evaluated each year based on its useful economic life. A tenancy for years, in which the contract is specified, including a clear beginning and ending date. A leasehold is an asset being leased, such as a building or unit in a building. A renter makes a contract with the owner or landlord to use the property in question, in exchange for a series of payments over the duration of the lease. A leasehold is most common for brick-and-mortar retailers, and the IRS does not allow leasehold improvements to be deducted. Here are 5 key takeaways. 1. A leasehold is an accounting term that refers to an asset or property that a lessee, tenant, contracts to rent from a lessor, property owner, for an agreed-upon time in exchange for scheduled payments. 2. Owners of retail stores often use leasehold arrangements for their businesses rather than constructing their own buildings. 3. The leasehold contract for commercial properties can be complex agreements that stipulate such things as the payment structure, breach of contract clauses, and leasehold improvement clauses. 4. The contract will stipulate which party is responsible for making leasehold improvements, which might include such things as building walls and partitions, adding lighting fixtures, or constructing shelves. 5. The IRS does not allow leasehold improvements to be deducted. However, the improvements are subject to depreciation. Hope this would help. Thanks for watching.